evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Nightly video for February 7th, 2019. And we're talking tech. We'll look at the XLK, our technology index, and then step inside Microsoft, Facebook, Amazon, Apple, Netflix, Google, maybe even IBM if we have time. Just looking at what the daily chart says, any type of option positions maybe we're playing, key levels to watch, and of course, anything really unexpected or out of the ordinary. And of course, I'll give you a hint. That would be additional upside action through our resistance targets. We'll start with the XLK, noting that our 200-day simple moving average, that's going to come into play in all the markets, all the stocks, especially the S&P, which has, at least of today, turned down from its 200-day simple moving average. And that's about 69.50 for the XLK. That's a target. That's a pivot point. It's a good spot to sell a premium on the call side up here, expecting the XLK and other names in it not to go above this boundary zone. And in fact, in the short term, to pull back to some support levels. That may be in motion today, and that will be our dominant thesis, and that will be our play for short-term trades. So that's the thought process for the XLK as you look inside of it to Microsoft. It had earnings. Not a lot of reaction after, little down, little up, back to where it started, closing today's session roughly at 105.50. That is a key spot. Look closely. That is a large overlap of all the moving averages, including that 200-day, which we'll focus on, 105 per share, and a falling trend line. That has served as resistance under 107.50. So premium sells might be done above 107.50, 110, or maybe even at best a few months in the future above 115. In-out spreads or put plays, purchased put plays to the downside could be done beneath 105 and especially 102.50. That would break support, probably keep this downtrend going, and push Microsoft down to the 100 target level. That again is the bear trend or dominant thesis for the moment. What should not happen in Microsoft? Of course it could. Would be a break above 107, 108 that pushes the price up to this prior high. So all trades we do are in terms of dominant thesis, especially swing trades, which is the logical play, and the alternate thesis. That means either taking stop losses if short, rolling contracts in the future, or otherwise glad we didn't take that position if we do see the alternate thesis come to pass. Next up is Facebook. It's a little different because it did burst higher on earnings, and it is at that moving average. Remember, just keep all these stocks in context to their 200-day simple moving average. That's about 167. We're going to have a floor of support, at least on the hourly chart, at about 165.50, and a resistance ceiling just about 172. Not a lot to do in Facebook except roll. If that was a short position turned bad, or if you stood aside, there's not a lot we can do. There's just better opportunities, I think, out there than Facebook. Sure, it can easily push down toward lower targets. If the XLK and other names do, probably Facebook does turn lower, but be a little cautious until we're under 164. Amazon did see a pullback. Remember Microsoft in terms of the resistance play? We were looking for downside pressure in Amazon to keep this range going. That was our target, right, in terms of our play. That target has been achieved. That's 1,600 per share. If the financial stocks, Amazon included, could be a retail stock depending on how you see Amazon, but that's going to push it down to about 1,500. It's going to be a downside play if all these things slip and turn to the downside. Triggers underneath 1595, 1590, and beneath that. Once again, call sell strategies are favored above 170 or 1750, maybe even 1800 prior resistance, and put buy strategies are favored beneath 1600. Apple, not close to its 200-day simple, but into a pivot point just under about 180 per share. Downside targets would include 167 and about 163. Split the difference for about 165. That would take us down to here. A lower pivot. Very short-term play. Not quite as clear with Apple because it does have resistance and it is overextended. like most things, we don't expect the market to keep going straight up. So bear plays are favored here, and that's going to either take the form of short-term in-out spreads, short-term put position plays, or premium sold above 180, or probably or preferably into the future above 190. Netflix had its earnings as well, down back to the high, and it's above the moving averages, but it is finding resistance at 360 per share. Their most recent couple of sessions took it down away from these pivots, giving intraday traders good short-term trend days on a departure play from 360. Right now we're into the support of 335, 20-day moving average, 200-day simple moving average, key pivot point, and that's roughly here. So if these stocks do turn lower, we'll probably see Netflix join them, and that opens up a pathway toward 316, maybe even as far as 300. And then Google had its earnings, and it's had a bear play. We expected it to turn down. We did get a trap, little bull trap that pushed above, and then boom, right back inside. So watch Google with respect to the 1100 per share level. Again, sell strategies are favored above 1150, 1175, 1200, and put plays, purchase puts, down to about 1050 or lower. Again, this is our pivot point. This is our trading range, and Google shares have turned back inside of it, leaving a potential downside play through this zone. Otherwise, alternate thesis, which we have to prepare for, would be triggering above 1100, 1125, 1150, and we can see that that price could rally quickly higher. We'll finish up with IBM. And this is how markets should react, right? We get a gap up. Volume is not that great. It is a key pivot. It is the 200-day simple. It's a gap zone, and we could even extend this of a price pivot. So two forms of resistance. Boom. And the stock trades down. So the downside target would be at least the moving average, 130 per share, or this prior price pivot, just under 125 per share. Again, we're not going to predict the future, but looking at where the markets are into overhead resistance, potentially coming down away from them, that's going to give us multiple strategies, either as intraday traders, short-term option traders, or just swing traders, to play the departure with an alternate thesis and therefore stop losses, hedges, or rolls above all these resistance points. As always, be careful, be safe. This is Corey Rosenblum with our Theo Nightly video for February 7th, 2019.